And I am back. Canadian or National Canadian National Railway Co. CNR on the TSX. Let's check this out. Look at that. That is a sweet ride up. 10 years monthly candles. And this has been steadily climbing up. Like I always like to start with my... See what is the prevailing theme. Is it an ascending channel? Seems to be. Right now we're approaching. Let me add my black area to be able to think. Now we're approaching the lower boundary of the ascending channel. It's all these channels or these slanted lines, but I play breakouts on horizontal lines. I trust them more. I trust more the value of the resistance or support that's been broken out of. But it's always good to know if you're an ascending channel or descending channel. Let's say you don't look at the moving averages. Well, you'll have that as a sign if you're an uptrend or downtrend. And honestly, I have the moving averages 10 and 30. But this is... I don't even use them anymore. I could actually remove them. It's just, it gives my subconscious sometimes of like where the trend is going. This is back from my Stan Weinstein days. Big fan of Stan Weinstein. I still believe today his trading framework is awesome and so simple. It's just great. I don't know why I left it. I decided to do other things, but I could have done Stan Weinstein today and still today, and I could be profitable for system also. So there's nothing wrong with that. And he had the moving averages. He played with that. If you had a breakout, let's say here, it was a weekly charts or daily on, I think the 200-day moving average for daily, and the 30 SMA on the weekly chart. And let's say you'd have a base like this. This is what he called a stage 1. And when he saw the moving average breaking out above that, coinciding with the breakout here of the resistance, you're in. And that's how he declared stage 2 breakouts. And you be in. What's particular of Stan is you had 2 stops. You had your entry, and you probably said market because you want to be in. And you had your sell stop, your initial stop, which he made you set, I believe, below the support, below that breakout move. But he had no profit stop. The fun about that is that he would move his, it's like kind of, he had a trailing tail stop, but manually. So the price action would move along. Then he'd let it, when the price would retrace a little bit, and then it started going back up. And the price was back to where it was previously, the same highs. He would move his sell stop below that, and he called that the support. And he just do that over and over. So if it would have been great for the last upward move that we had for the last 10 years for the stock markets, because he could have. So there's a huge whipsaw. He would have been in and would have been able to ride all those profits without being triggered out. Classical chart patterns. See, here's the move, top to bottom, added to breakout line, and classical chart pattern. That's it. You're in, let's say, and you're out here, and then you have to wait for another. You have to wait for another move to be able, another pattern to play out for you to play. So you'd be playing a lot of patterns along the way. And Stan's way, well, you'd be able to write all of that all the way up here, up. When the price goes down, it didn't go down, went back up here, and then up, and down here. Your sell stop's still down here. He didn't move until the price goes back up. When the price is back up to where you were, then put the sell stop down here, and henceforth. Price goes up, price goes down. So now your sell stop is still here, and you've locked in all those profits all the way since the beginning. There, these are locked in. Price moves up, went down. It's going down. It's not back up to where it was here. So you're still here. So we have to see what's gonna happen here. And what that did, it maximized your stage 2 run. He'd stay in as long as possible. And when the sideways move, you had a prolonged sideways move, that's when you get triggered up. And that's what he called the stage 3. You'd get out. And he'd make the same thing, but you could play it as a stage 4. When it goes down, it was the same thing. Moving average cross with a coinciding a breakdown line. Let's say moving average, 30-week moving average going down. Coincide with breakdown line. Short sell. Put your buy stop to protect yourself on top of the resistance here. And do the same thing. Ride all the way down till you get back to stage 1. And what? Am I talking myself to doing that again? I could. I don't know. Sometimes we had success with a system or a framework, and then you get curious and you want to try other things, and you're doing it your own way, and then you forget that the basics actually really, really work. So I always think of Stan when I try to when I'm starting to get too far away and I'm looking at 1,000,000 oscillators, indicators, and whatnots. I say, hey, it doesn't have to be that way. All these systems, all these Fibonacci and retracements, and they all overlap because they all derive from one thing, is a price action. Elliott waves, don't know too much about it, but everything is derived after the price action has been jotted down. They're not inventing anything. They're not predicting anything. If people could predict things, everybody would be trillionaires, billionaires. Nothing is predictable. Nothing. And you got to remember that. So the price action is the closest thing to reality. As soon as somebody buys and sells at any given time, that's the reality of the value of the stock. Everything else is derived from the price action here, all these candles. And these things, these indicators derive from the price action. Moving averages derive from the price action. Chart patterns, they complete only after the price action has done certain moves. So it's all noise, and they overlap. Like I said, somebody said, look, I have a resistance here. I traced it with my Fibonacci. Well, yeah, okay, it coincides with the way I traced mine because I'm following classical chart patterns. Coincides with mine because I draw my support because I'm based on RSI, and none of them are wrong. It's just they overlap, and you just choose whatever you like, but don't choose 10, just choose one. Same thing for anything else derived from the chart. That's what I've realized, that nothing's wrong with any of them. The most important critical part is to have just sound risk money management. And that's about it. Keep it simple. Good risk money management, and try to keep a cool head. Don't get greedy. Respect your system, whatever it is, and you'll do fine. Pretty sure you'll do fine. But the simpler it is, the easier it is to respect it. So that's rule number 1. Simple game plays in any sport, repeat over and over to perfection. Focus on them, and that'll win you championships. Not Hail Marys, not throw 100-yard football across the field. That happens not often. But just rushing for 5-10 yards, throwing the pass for 5-10 yards over and over, that's what's going to win you the game. Same thing with trading. You got to remember that. I'm saying this out loud to you guys, but I'm saying it to myself first and foremost. It's a reminder for myself to try to respect that. All right, let's do it. Back. So moving averages, I could actually flush them if the way I'm doing it now. RSI, I could also flush it, but this is nothing. RSI, I'm only using it. People use it for overbought, for oversold, whatever. I only use it for the as a final check to see if I have divergence with my price action. If I drew my lines correctly, then my chart pattern correctly, then I don't have any opposite divergence with the direction I choose for the breakdown. It's like a clue to if I have divergence with the RSI, then it's just a clue that I might have misread or misdone my classical chart pattern. But if it's done properly, it's just gonna confirm something that I already knew. So somebody who's really, really good doing classical chart patterns, they could probably flush the RSI because they know it's going to support whatever move they read on the chart. Maybe one day I'll get rid of it. Right now, I need it. And while I'm talking, I'm setting these alerts because right now, this February candle seems to be breaking down. Okay. Wow. Okay, let me zoom in. This is interesting. CNR. All right. Bigger candles. There you go. So this. Get some laser accuracy right here. So right now it is breaking down. Let me get precise with my arrows. All right, top to bottom. Create a parallel line, add it to the breakout line. All right, so right now, a lot of noise on this CNR chart. All of this, man, lots of noise, and even so this on the weekly and daily. These are daily and weekly closes below the support line, which is at 98.5. 98.5. The resistance is at 106. And even in this candle, this February candle, we have a look. This might be posted in March, so we might have a close, and then we'll see if this breakout is still playable. If the price action stays below, then the implied measure move is this 90 target. So that's interesting for that. And what's fun about the target, let's say I would decide to go in, I'd always check to see if I'm going to run into a wall, and a wall is what I call a previous resistance turn support, or support turn resistance. So here is the previous breakout on this candle here, which reaches target very nicely. This is like a very nice breakout. And so right now, 87 is about my, there's going to be some congestion here to go through there. My target is above that. That means I have higher probabilities of reaching that possible target. So there's nothing hindering me choosing that target once the breakdown is confirmed with the end of the February's monthly candle. And like I said, my final step after I do those target considerations, adapting my reward, lowering it essentially to make sure I don't run into any congestion to increase my chances. I could check with the price action to see with the RSI if there's divergence. And right now it's just sideways move here. But the RSI, see the price, could also have drawn my lines like this. This also could have been in a descending triangle. And it's funny, sometimes I just relook at charts and patterns just pop up. I re-see different things, and we're humans, right? If I do that, the same thing, maybe somebody else does it, unless they all have programmed the algorithms. Maybe I should get on that program. Okay, lower highs, no divergence here. And for the RSI, for the lows, Lower lows. Yeah, so if this closes under the breakdown line, we're going to have a lower low. And it's going to be all steam ahead to try to reach that target. Cool. All right, so I'm going to keep this chart open. And I'm going to play it probably that way if ever we have a close below the February candle. So that's what's happening here. So thank you, Stan, for showing me. And right now, this is probably the way I would do it for CNR. My way. All right, cool. That's about it. See you soon, CNR. Ciao.